Hi there, Brock VandenBerg, Fund Manager for TaliMar Financial and TaliMar Income Fund. First week of the month, and this is where we get a lot of loan requests, especially refinance requests for loans that are about to mature or have matured. So I wanted to do a quick video on what we look for as a direct lender on when we do refinances for these loans in these scenarios. So the first thing we're going to look at is, number one, has the loan already matured? If you're a borrower or you're a broker, make sure that you're working a exit strategy prior to the maturity date. Anytime I see a loan that has gone beyond its maturity, the first question I ask, especially there's a red flag, is why did the borrower not manage this prior to the maturity date? So assuming we can get beyond that and there's a good explanation, the top things that we look for, number one, is what is the property and what is the scenario. So we get a lot of extensions on fix and flip loans and new construction loans, especially ones that have been recently completed and they just need more time to market. Maybe the existing lender is only giving them a 3-month extension at a very high cost, and they just need more time to market the property. We usually just can offer for about the same cost a 12-month extension. If it is a fix and flip or new construction loan, we want to make sure that it's completed. And if it's not completed, understand how much work is left and set aside funds to cover those future costs. We also look at the payment history. So we want to see a clean payment history, typically 12 months. We don't want to be stepping into a loan where a borrower has missed payments, has a lot of NSFs, or is missing payments. We're going to look at that payment history. Other things that we're going to look for, obviously, is what is our exit strategy? Are they intending to sell the property, or is this going to be a refinance scenario? And if it's a refinance scenario, get comfortable that a refinance is actually an option to take us out. Now, keep into consideration, we are a bridge lender, so these are only short-term loans. And then we're going to look at the borrower also, their financial capacity to actually make the payments. I think there's always a misnomer that as a private lender, we're not worried about borrower financials. Well, we don't want to walk into fund a loan in which the borrower has no ability to actually make those payments. So we'll definitely look at the borrower's capability of making payments. If you found this video helpful, please give it a like, give it a thumbs up. If you're interested to learn more about how we refinance loans that are nearing maturity or have matured, feel free to reach out to me or my team. And if you have a general loan request throughout California urban markets, feel free to reach out to us. We'd love to hear from you. Thanks for listening. And again, you can follow me by following the link below.